Hello, welcome to the XUCPA channel. For those of you who are business owners, if you are here for the very first time, today we will be talking to you about how to maximize your auto deductions, which is very important for those of you who drive a lot, whether it be visiting your clients, or your potential clients or your vendors. You will be very interested to know how do you best maximize your deductions, and today we will show you different methods that you should consider when you claim for auto deductions. I hope you enjoy this session.
You can generally figure the amount of your deductible car expense by using one of two methods: the standard mileage rate method or the actual expense method. If you qualify to use both methods, you may want to figure your deduction both ways before choosing a method to see which one gives you the larger deduction. So let's talk about standard mileage rate. For the current standard mileage rate, you can refer to publication 463, Travel, Entertainment, Gift, and Car Expenses. Or you can also search for standard mileage rates on IRS.gov. Now, in the year 2020, business mileage rate was 57.5. 2019, it was 58. So as you can see, it does actually fluctuate from year to year. So you need to make sure that you look to the IRS.gov website to double confirm the rate change. Now, to use the standard mileage rate, you must own a car. If you don't own a car, you need to be leasing a car to prove that you are actually using your automobile or your car, for business purposes. So here are some rules. The first rule is that you must not operate 5 or more cars. So meaning if you have lots of vehicles, then you can't use the standard mileage rate. You must not have claimed a depreciation deduction for the car using any other method other than straight line. You must not have claimed a Section 179 deduction. You must not have claimed the special depreciation or bonus depreciation allowance. You must not have claimed actual expense after 1997 for a car you lease.
Now, one thing that you need to pay attention to is if business owner wants to switch between having the option of using a mileage method or the actual method, there are some rules that you need to be aware of. Example, you cannot claim car expenses under Section 179 or bonus depreciation. So what are those? Example, if you buy a truck for your business and say the truck is 6,000 pounds and above and it costs you 50K. So in the first year, you can claim the 50K as a deduction. But if you do that, then you cannot switch back to mileage method in the following year. So those are rules that you need to be aware of.
So basically, when you have standard mileage rate, typically what people do is that you would actually track your trips. For example, Monday, if you drive from your principal place of business to a customer site, and the return trip is say 20 miles going to the customer site and coming back to your principal place of business, then you are allowed to claim 20 miles times 57 cents. And you need to basically track all these trips throughout the year and compile them, and then at the end of the year report the total business miles that you have driven during the year. For actual expenses, now it says actual. So what that means is that you will be claiming all your actual car expenses such as gas, oils, repairs, tires, insurance, registration fees, licenses, depreciation. Yes, you can deduct the cost of your car, lease payments attributable to the portion of total miles driven that are business miles. So essentially what this is saying is that you need to track your business usage percentage. So I'll give you an example. If you fill up your gas for $50, let's say per month, and let's say for 12 months it's going to be 600, then you really have to determine, all the actual expenses, for your gas, your insurance, your licenses, your registration fees, how many percentage of it can be attributable to business purposes. Other car expenses for parking, fees, and tolls attributable to business use are separately deductible. So remember, you can always, regardless of what method you use, you can always deduct toll charges and also parking fees. So make sure that you track those and make sure that you don't lose those deductions.
So hopefully you have learned something about the difference of mileage method and actual deduction method. But that's not it. In the next video, we will be covering, what's the cost and what's the pros and cons of buying a business vehicle versus leasing a car, which is a common question. We are also going to cover in the third video of whether do you really need a mileage log. See, a lot of people ask, if I already claim gas, why do I even need a mileage log? We are going to show you steps of what you need to know to stay out of trouble with the IRS. As usual, if you would like to support us, please like, share, and subscribe to our YouTube channel. And we'll see you next time. Thank you so much. Bye-bye.